So, James, these exports are disappointing, which adds to the global manufacturing slowdown narrative. But the imports were a beat. How do you square the circle?
The first thing I think you have to remember is that May of last year, which is what the comparison is, in the year-on-year comparison, was a good year for Chinese exports because the country just reopened from the Shanghai lockdown. So there was a massive spike from April to May last year. And so with comparing that this year, we're looking at actually worse than that 4.5, the number, the export slowdown that you're seeing. It's the third month that's fallen, and I think what you're really seeing there is across-the-board weakness for Chinese goods. It's double-digit declines in exports to the US and Canada, to the EU, to ASEAN countries, to Japan, to South Korea, to Taiwan. Really the biggest bright spot was Hong Kong, which is, you can argue whether that's really foreign trade or not. And so it really does show this sort of global weakness story that you mentioned. And it also indicates that there isn't going to be much help for the Chinese economy, which is struggling from global demand. So whatever is going to help the Chinese economy this year probably has to come from more internal drivers than external drivers. And you're seeing that weak domestic economy in the import numbers. Yes, the slide in imports wasn't as bad as for exports, but this is, we've seen months now of falling import numbers. Industrial goods demand is falling, iron ore, coal, LNG, the demand for these things is falling, but also you're seeing big slides in imports from South Korea and Taiwan, which is indicative of the fact of the global slowdown in the electronics trade. China imports mostly semiconductors and semi-finished manufacturing products like screens from Taiwan and South Korea, and the imports from both of those countries fell by more than 20%, which is really not a good indicator for future exports for China, because most of those things are going to be assembled into computers, phones, and other things, and then hopefully re-exported. So if that's falling 20% plus now, in a couple of months' time, you're going to be seeing even weaker exports. So all in all, this is a really bad sign for the Chinese domestic economy, and also an indicator that global demand is really not strong at all.